Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Unemployment eased to 7.1% in the month of March from 8.8% in February. This translates to about 3.44 million jobless Filipinos. That's fewer by about 747,000 from February's 4.19 million. That's according to the PSA. The March print is the lowest unemployment rate since April of 2020. On the other hand, employment rate rose to 92.9%. That's from 91.2% in February. This translates to a month-on-month increase of about 2.18 million Filipinos who had jobs or businesses to 45.33 million. The labor force survey was conducted before the government reimposed stricter quarantine restrictions in Metro Manila and nearby provinces. Meanwhile, underemployment fell to 16.2% from 18.2% in February. Kicking off the markets report with some optimism there. Of course, markets have yet to digest those unemployment figures. Recall that yesterday we fell for a fourth straight day to our lowest level since October. It seems that we are now back above those 6,300 levels here, up by 0.2%. That's after we had broken below the 6,300 levels yesterday. Of course, yesterday we also had those inflation figures and central bank governors saying that that inflation rate will remain elevated this year due to supply side pressures. Very quickly here, I do want to take a quick peek at which ones are moving. Of course, after we did get this unemployment print, we've got SM Prime leading the charge here, up by 1.6%. A couple of other big stocks here, JG Summit, for instance, in Universal Robina, also reversing some losses in the past few days. Metro Bank, however, still sitting out this rally, down by 1.7%. Let's get through some earnings. This morning, MPIC had reported their earnings towards the latter part of yesterday. The net income, 7.03 billion pesos. That's up a hefty 272%, but that is also owing to, of course, they had sold their stake in a power producer and a toll road business over in Thailand. So this may be a one-off. And when you look at the core net income, that was down by 26% to the tune of 2.5 billion pesos. Now, of course, they had already reported Meralco's core net income down by 11%. They had mentioned there were lower volume sales of electricity due to the lockdown, particularly in the commercial and industrial sectors. The toll roads core income was also down by 15% to 788 million pesos. They had mentioned, of course, reduced toll road traffic. Maynilad's core net income was down by 24%. Hospitals, however, the bright spot here, that core income was up by 6% in the first quarter year-on-year to 285 million pesos. Another very interesting thing about these earnings is that they mentioned that the Create bill had saved them 500 million pesos in that first quarter. Now, according to CFO Ms. Cabal Revilla, MPIC is now poised to hit 12 billion pesos in core income by the year end. So they are keeping that same core profit target. And they had mentioned some developments here. MPIC's toll road still considering an IPO, but the market is not favorable at present, according to their CEO. Another thing that they're looking at is a REIT as a funding option. They said on Wednesday they're studying the possibility of a REIT for their infrastructure arm. MPIC here flattish, trading at 4 pesos. Now let's take a look at LTG. That's another one that would like to pursue digitalization, particularly for its banking unit PNB. And on the back of that, they're saying that they're going to be spending, they're boosting their capex plan by 50% to 9.7 billion pesos. They're also saying that demand will be improving this year, particularly for their consumer goods. LTG trading at 13 pesos and 10 centavos. Now here to dissect all of these earnings and what these unemployment figures mean for the markets, we have with us Tina Ulang, First Metro Investments. Good morning, Ms. Tina, and welcome back.
Hello. Hi, good morning, Danie. Good morning. Nice to be here.
Ma'am
Business
Tina,
World.
let's kick off with unemployment figures. Of course, this sprint comes before the lockdowns, but is this something that the markets had already anticipated? It's something that's already been priced in, particularly looking forward. Of course, this was in the month of March. We've already gone through April's lockdowns. We're already here still in MECQ. Have the worst of the unemployment and job losses already been priced in by the markets?
The market is trying to ponder a lot of things, and one of these things is the just reported unemployment. No, but I think the key focus is when would the lockdown be? When would the normalization come? That's the major question in the mind of the market, because that is really what's gonna pave the way for more job creation, the infrastructure, and we're not moving in that direction yet because we're still on lockdown, and there's question whether by May 15 we're going to be relaxing or not. And there's also worry about this virus variant, the from India, and we are on a lookout for those that were infected. So how is this going to pan out? That's another worry of the market. And the restrictions are going to be tougher, I think, because of this new variant. So how is this going to affect mobility and transportation? So the market is really distracted and kind of digesting a lot of things. That's why they move below 6,300. But there are a lot of positive news and silver linings. And it's just that the question is when will all these good factors come out, especially the reform agenda, all those are designed to ease the pressure on investments like your and also on the banks like your financial institution strategic transfer, your public service act, your retail trade liberalization law, and the create. All of these are the part of the reform agenda that the rating agencies are looking very kindly on us. But the question, and of course, Bayanihan 3 is in the works. There's going to be fiscal stimulus, and some 30 million vaccines are going to arrive this month. So, but the question is the timing, and that's what the market is thinking about. And so, in terms of your question, whether all this unemployment is digested, it's just one of the many worries of the market.
Ma'am, when you talk to companies here, especially after the first quarter print, can you say that the worst is over when it comes to the layoffs? Especially since they've already laid off several workers in 2020. Were they able to already make cost rationalization such that this year that might not be needed anymore?
Well, the business models are changing. Actually, the corporate sector are revisiting the way they do business. It's the doing the art of the possibility. What is possible under the new normal? And the question is not about the new normal. It's are we prepared for the new normal? So that is the mentality of the corporations now, and they are doing this digitalization and digitization. And the impact of digitization and automation is always negative for employment. You may have to lay off some of your workers that previously do things manually, but since the corporate sectors are shifting to more digitization, some banks are shrinking their branches. So the effect on employment is something that remains to be seen. So this is where the government's hand is needed. We need to skill retool our workers with new knowledge because we are moving in a entirely new world of digitization, and this is the permanent trend, I think. It's not just because of the virus. And so there should be investment on how human skills and how human capital can be reshaped to fit the new and emerging economy of in a more digital more digital mode of this economy.
Very interesting po. So it's not just about the lockdowns restricting people and movement, but also the changing trends in the companies and how they have to adapt to that. Ma'am, let's go specific in specific earnings. We just broke the MPIC earnings. Of course, there was a big boost because of this sale of the toll roads. But when you look at the core income, it was nevertheless down. Again, this is something that has been persisting. The electricity sales, the toll roads are still closed, but has the worst been over, especially since they're still keeping their targets of the 12 billion core profit?
Mm. Metro Pacific has a lot of potential further down the road because they're really participating in the nation building of this country, improving the capacity of this country in terms of electricity, in terms of energy requirement, water supply. So it's just that there are a lot of setbacks now. It's the pandemic environment requiring a relaxation of the collection. In Meralco, no disconnection policy. In water, no disconnection policy. So this have impact on the cash flow. And but in terms of the earnings, down this is really a long-term buy because the infrastructure has not really been opened up. We are on lockdown. So the question is when is the reopening of the economy? But that depends on the vaccination. And the question is, are we going to achieve herd immunity by the end of the years, given the pace of our vaccination now, which is like 30,000 per day, and the ideal is like 100,000 to up to 400,000 a day. So all of these are questions and hangs clouding the outlook for infrastructure, not only for MPI but infrastructure exposed companies. And my take on MPI is that long term this is a good investment because this is really about nation building and infrastructure, declogging the congested capacity of this country. It's just that you have regulation also, and the tariffs are going to be approved eventually, so that's a boost on your revenue and your bottom line.
Ma'am, can you comment on REIT as a funding option for MPIC? They had actually, sold some stakes already in the toll roads, particularly to pay down some debt and to restructure. And now they're tapping into more fundraising via a REIT IPO. Is that something ideal? And would investors be interested in this type of REIT for tollways vis-a-vis, versus the likes of a REIT or Double Dragon?
Mhm. The appetite of investors is more of a need for and a preference for something that is recurring, something that is almost sure, like fixed income in nature that gives you a dividend rate, that gives you an annuity. So this cash flows coming from the toll road is something that can be repackaged and can be structured in such a way that it gives the investors an opportunity to participate in a quasi fixed income instrument like a REIT. And of course, you can do a lot of investments there within that space. And I think that's very innovative, and it widens the investors offering in the capital markets. I think this is and MPI has always been very innovative in terms of giving opportunities to investors and in their own investment strategy.
Okay, so one to watch out for there if the recurring revenues are quite stable for that REIT. Ma'am, while we're on the topic of IPOs, Mondanisan has now priced at 13 pesos and 50 centavos. This is significantly lower than what they were hoping, which was above 17 pesos. What's going on here? And will that actually bode well for those interested since it's going to be cheaper? Or is this a reflection of how the markets might be moving when this IPO comes into play?
Mm. Well, I think Mondanisin is trying to be very realistic in this market that we have. Our market is a bit weak, and our actually very weak, and the foreigners have gone out on the 24th, 25th day of foreign selling, and I think the pricing is very competitive. Has improved from the maximum target of like 30 times P. It has gone down to like almost on par with the local peer. And I think that makes it attractive. And of course, if you have some kind of participation and support coming from existing owners or uh, I think that's going to be good. It's just that the market is kind of weak, and this issue is big, and therefore there has to be some realization that the pricing has to be very realistic. Yeah, to give some to give money to investors and to leave some money on the table.
Okay, ma'am, you were talking about the peers. I do have to mention URC here. What's your take on the first quarter earnings and whether this is a pandemic favored stock still? It was towards last year, but now with the earnings and the outlook, what are you looking at, and how does this affect the pricing and appetite for Mondanisan?
URC has done a very good job, like 2 years, 1 year. In recent years, they've overhauled their supply chains, their product offerings, they've streamlined their SKUs. And I think management deserve a commendation for making all of this innovation and then the supply chain efficiencies. And this is paying off in terms of their income. Look at their income, very resilient, 52% up. And this is an issue within the essential space. And Mondenism is within the same space, very essential, consumer staple, although they have some discretionary. But this is something that is going to be part of the basic needs, and it's going to be gaining patronage. It's just that they have to do a lot of multi channeling, more product innovation, which is what Mondenism is doing, the meat alternative, and the product offering here and abroad. And if you are going to look at the essential space, DNL, Century Pacific, they have all posted very strong results, and that reflects on the kind of environment that we are operating in, lockdown, in a return to the basic needs. So this is the kind of stocks that investors are going to be looking for stability and for sustainability. And the price has really become uh, very realistic given the conditions of the market.
Okay, so better realistic pricing there, and as you mentioned, still the favored stocks during this pandemic. Thank you so much for those insights, Tina Ulang of First Metro Investments.
Thank you. Thank you.
Checking in on the other headlines, we're keeping our eyes on the executive order reducing the tariff rate for pork imports will be amended. That's after senators and the economic managers reached a compromise regarding the policy. The proposed adjusted rates for pork imports under the minimum access volume quota will be set at 10% for the first 3 months and will be increased to 15% for the succeeding 9 months. That is from the original rate of 5 to 10% under the original EO 128. But Senate President Tito Soto said tariff rates outside the quota will be retained under the EO. Out quota rates will be lowered to 15% in the first 3 months and will then be increased to 20% for the following 9 months. That is from the original 40% tariff rate. The Senate earlier adopted a resolution urging Duterte to withdraw EO 128 for the sake of the local swine industry. But Soto said they compromised after Finance Secretary Sonny Dominguez and other economic managers advised that these modified rates will help reduce inflation for the foreseeable future. The economic team and the Senate likewise agreed that the cap on MAV may be reduced from 404,000 metric tons to a little over 255,000 metric tons. The Agriculture Department says stabilizing the country's pork supply will help arrest the inflationary impact of ASF and the dwindling pork supply on millions of Filipino consumers. NEDA is now expected to formally recommend these revisions to President Duterte. Marikina 1st District Representative Stella Kimbo is proposing to implement austerity measures to afford the third stimulus package. This as economic managers are still scrambling to identify funds for the implementation of the Bayanihan 3 bill. Kimbo said that government agencies could cut costs for non-essential agency spending like travel. At least 3 committees at the House of Representatives have approved the proposed Bayanihan to Arise as One Act, or the Bayanihan 3, which sets aside 405.6 billion pesos to help the country recover from the impact of the pandemic. The lawmaker adds that President Rodrigo Duterte may certify the bill as urgent once economic managers figure out how to fund it, which remains as the biggest challenge for its proponents. And nearly $14 billion worth of planned LNG import infrastructure may be at risk of becoming stranded assets. That is according to the Institute for Energy Economics and Financial Analysis. The projected amount covers investments in LNG power plants, powers, regasification facilities, and pipelines. The group explains that this may happen since the market is currently adapting to lower costs of renewable power generation, which is likely to continue in the long term. It adds that production shut-ins, cold weather conditions in Asia, and shipping delays may also cause prices to skyrocket to $32.50 per 1 million British thermal units. Hence, the IEEFA believes that volatility and long-term upward price risk represent a serious threat to the utilization rates of potential LNG-fired power plants in the Philippines. At present, 7 firms planning to develop LNG import terminals in the country have already secured permits from the Energy Department. And that's a first look into the business day today, Thursday, May 6, 2021. Catch Business World Live for the market close. That's at 3:15 p.m. today. And Danie Laurel, mask on, wash hands, stay safe, Philippines. We are One News.